In today's lesson, we're going to look at journal entries. So journal entries I often call recording in the general journal. So we've already done a bit of analysis in chapter 1. We're going to do a little bit more in this chapter, and then we're going to actually record journal entries. Well, it would pay for us to keep some general things in mind before we actually get into recording the journal entries. One of the things is that debit equals left and credit equals right, and these have no greater meaning in accounting. The debit is just left, credit is just right. In a face-to-face class, I'll tell people to practice by thinking about taking debits instead of taking lefts in the car, and taking credits instead of taking rights in the car. Again, there's no greater meaning. In accounting and in doing journal entries, it's very important to keep in mind the normal balance of an account. So there are 6 basic account types. Asset and liability are 2 of those. Assets go up with debits, and assets can be any type of property that a business has. For example, they're the cash that the business has, the inventory the business has, any money that's owed to the business, any equipment or land. These things are all assets. Liabilities are anything that the company's borrowed. So for example, if the company owes a bill but hasn't paid it yet, that's a liability. If the company's gone to the bank and borrowed money, that's a liability. Liabilities go up with credits, assets go up with debits. But don't read into this that assets are always good. Don't read into it that debits are always good and credits are always bad, because truthfully, that'll depend. Sometimes debits are good, sometimes debits are bad. Sometimes credits are good, sometimes credits are bad. We have 4 more basic account types. One is common stock. This is an equity account. It's the amount that the owners are owed, or sort of like the ownership interest in the business. In any given business, as you saw in chapter 1, the creditors will own some piece of the business and the owners will own the other piece. Dividends are any money that the owners are paid from the corporation. Revenues are assets received in exchange for work. Expenses are assets given up to generate revenue. Okay, you're probably ready at this point to consider the first transaction. So let's imagine a case where Bill Connor invests 3 things in his new business. He invests $65,000 in cash, $35,000 in office equipment, and $25,000 worth of land. So the $65,000 is probably actually cash in a bank account. The $35,000 probably represents an amount that Connor paid for office equipment. And $25,000 probably represents an amount he paid for land. He's going to put these all in the Connor Corporation. Let's look at how we record the assets themselves. So the presentation you see across the middle of the page, date in the left column, account type or transaction type in the next column, post reference in the 3rd column, debit in the 4th column, credit in the 5th column, is a pretty common way the general journal can actually look. So I put a date in, the date of the transaction. There are 3 account types: cash, office equipment, and land. All of these are going up because Connor put them into the business. So from the business's standpoint, they're going up. So we show debits by each one. That journal entry that you just saw on the previous page was not complete though, because a journal entry has to balance to be complete. So let's think about what the credit should be. Well, we ought to add up the $65,000, the $35,000, and the $25,000. This creates $125,000 worth of investments that Connor made. Now, Connor probably is going to have an ownership interest in the company. In other words, he invests here, he puts the assets in, and he doesn't necessarily expect anything out right now, but he does want credit for his ownership. So we might issue shares of stock to him worth $125,000. So let's look at the next transaction, which is a completed journal entry. And so here we have the final journal entry. I said it was another transaction, but it's really not. It's the same transaction. And here's the journal entry. We have a debit to cash for $65,000, a debit to office equipment for $35,000, a debit to land for $25,000, and we're going to offset these with a credit to common stock for $125,000. This is a complete and proper journal entry, and it balances. Technically, we probably should add a description. We might say something like, Connor invested cash, office equipment, and land in his business. Now that you've seen a final journal entry, let's look at some rules. First, total debits must equal total credits for every entry. You don't have to have the same number. There could be 3 debits and 1 credit. There could be 5 debits and 3 credits, but the dollar amounts have to agree. The second rule we follow is that debits are always first. So among debits, we can put whatever debit we want first, whatever debit we want second, and so on. For example, I could have changed and put owner's equity first and cash second, but the debits always go first, and then the credits go. Finally, we indent credits in the general journal. Here's some other sample journal entries. These are ones I'm not going to talk as much about as the first one, but they just give you the idea of how to record the other main types of transactions. So in this one, we have a liability account. Accounts payable is the liability account here. And we show that on June 1st, we owe money for rent, $1,000, but we haven't paid it yet. So rent expenses debited $1,000, accounts payables credit $1,000. If maybe we pay the bill 10 days later, when we pay the bill, accounts payable, which we'd shown going up with a credit, because that's its normal balance, now goes down $1,000 when we pay the bill. Cash also goes down, and we show it going down with a credit. Notice we don't show rent expense any other place but June 1st, or we'd be double counting. This also serves as a good example of how we record an expense transaction. Notice again that rent expense went up with a debit. And if you go back and look at the normal balance of expense accounts, you'll see the normal balance is debits. Here's a dividend example. If the business was profitable and pays its owner, Connor, out some money, as it might have on June 1st, then we'll show dividends to Connor going up, $5,000 with a debit, and we'll show cash going down, $5,000 with a credit, as we pay Connor out. Here's a revenue example. Revenues, remember, are assets received in exchange for work. So on June 1st, we did some work, and we show accounts receivable go up $6,000. We show fees revenue go up also $6,000. So accounts receivable is an asset going up. We have a promise to receive money. That's a good promise, by the way, but we haven't gotten the money yet. And fees revenue is the revenue itself going up. Remember that the normal balance of revenue accounts is a debit. Then on June 30th, when we actually receive the cash from our customer, cash itself goes up $6,000 with a debit. Accounts receivable goes down with a credit. We don't show fees revenue go up again with a credit on June 30th, or we'd be double counting. Now, the last thing that I wanted to make you aware of is that when we start recording in the general ledger, posting from stuff we've recorded in the general journal, when we start posting to the general ledger, we're going to need account numbers. You should think of general ledger accounts as being spreadsheet pages. And so all of our general ledger accounts like cash, accounts receivable, inventory, and so on, if they're assets, they'll have numbers from 1 to 199. If they're liabilities, 200 to 299. If they're equity, 300 to 399. If they're revenues, 400 to 499. Cost of goods sold expense is something we don't start to talk about until about chapter 4. But when we do, we'll see that we give these accounts numbers from 500 to 599. And then all other expenses get numbers from 600 to 699. Well, as you go back and you look at this and you consider other journal entries, give me a call or text me if you have any questions about anything. Thank you and good luck.